Claudia Sahura, today is Wednesday, November 19. We'll be with you with the midweek market update. It's a very important day today. While the market is waiting for Nvidia's earnings report, one of the biggest and most important earnings in the history of the stock market in Wall Street history. Nvidia already has more than 7% of the S&P 500, just imagine one company more than 7% of the total S&P 700, S&P 500. That says that it's very important the company and the earning of Nvidia is not just because this its biggest company of the world is because of its stake or its share of in S&P 500. It's also because of its nature of the business. As the earnings of the Nvidia will tell us will should we count in AI or not, because is that enough profitable business or not, just like uh, we now already that AI is made many changes in our history, many changes in all parts of our life, even in not just in the business, in personal life as well. But the question is, with the high value of investment that we have in the AI businesses, in the AI related stocks, in the AI related technologies, is that enough profitable or not? Because market, what market look at at the end is that for the investor, what's important for the investor is, does it give me enough money or not? That's the most important question that investors ask. So today we're gonna get the answer of this question. That's why the Nvidia's earnings is very important, and that's why the market is very cautiously watching on that. And the stock markets across the world, they have different reactions now. The Fed, on the other hand, we have Federal Reserve minutes of this October 27, 28 meeting. And that also should give us better idea of the decisions and the conversations that they had during the meeting. Markets, they had, in Asian markets already had a negative reaction to that. The European markets also is negative ahead of the US market opens. US market last night closed lower, and the future market today also, they're not moving sideways with the somehow mostly they are moving sideways with the slightly negative reactions. What we had in economic calendar so far this week, we started the week with the Israeli and GDP numbers in the third quarter, which increased by 12.4%. This is while in the second quarter, GDP fell more than 4% in Israel. Monday, GDP data from the Japan showed that the weaker data with the 1.8% GDP contraction, which means that the central bank in Japan can be in line with the government, Mr. Takeshi's government, and hold the current rates at 0.50% by year end. We don't expect any rate cut or any rate hike or any policy change right now from the Bank of Japan with these data. However, we had some other data positively from Japan, such as the industrial production, but still, which increased by 2.6%. But still, the Japanese economy sounds like it needs more support and help. Monday, the other important data which we had in the market, it was Canadian inflation data, which increased generally just like the common CPI, it was at 2.7%. Core inflation increased to 2.9% from previous 2.8%, but the headline inflation slightly eased to 2.2% from previous 2.4%. But what was interesting and important to watch, it was the monthly inflation, which increased by 0.2% for the headline inflation and 0.6% for core inflation, which means that Bank of Canada that's already cut the interest rates by 75 basis points in its last two meetings would support policymakers probably with these numbers will support that the current rate, holding the current rate on policies by year end, and they for 2025 we don't anyway anyhow expect any rates cuts or policy change in Canada with these numbers. Tuesday that was the Tuesday, and that was the Monday and Tuesday. Yesterday we had the initial and continuing jobless claims data from United States. The data is supposed to publish on last Thursday because of government shutdown. published the delay. We know that the last Thursday it was the first government open day after 43 days. So data we had, these data we had yesterday, early morning at 11 a.m. in European time. Initial jobless claims increased by 232,000, much more than expected, slightly more than expected, sorry, but still lower than 250,000, the usual number that we expect from United States, and continued jobless claims by 1,947,000. It printed slightly bigger data, bigger number than 1,930,000 expected, but still data shows that while the labor market is cooling in the United States, but the numbers are still positive and good. Housing start in Canada increased slightly bigger than expected, while in the United States, the durable goods orders, excluding the defense, increased by 1.9%, and excluding transportation, increased by 0.3%. Factory orders also increased by 1.4%. Generally, the data we had from the United States yesterday, they were somehow positive. Today started with the U.S. foreign bond buying by the foreigners, which increased by $37.9 billion. Yeah, that was slightly less than previous months, but at the same time, it's a very big number, which means that the foreigners are still trusting in the U.S. economy and buying the U.S. bonds. Producer price index in New Zealand slightly eased. In Japan, core machinery orders in both monthly and annually increased very good. Monthly 4.2% and annually 11.6%. Wages, the price in Australia also increased, but in United Kingdom, inflation eased as the BOE expected, 3.8%. It was previous months, but this month inflation slightly eased to 3.6%, while the core inflation also slightly eased to 3.4%. Producer price index and retail inflations also, they both slightly eased. In South Africa also, we saw the inflation slightly lower at 3.1% annually for core and 3.6% for headline inflation, which headline inflation slightly higher than 3.4% previous month, but still on a monthly scale it was fine. In Eurozone, inflation eased. The core inflation unchanged at 2.4%, but headline inflation is to 2.1% from previous 2.2%. But looking at the monthly scale, monthly number shows that the core inflation increased by 0.3% and headline inflation by 0.2%. That means that inflation after the slowing down in recent months, these months should be closely watched, because these numbers can tell us that probably we can have the higher inflation in next months as the monthly scale is increasing. 30 years mortgage rate increased from 6.34% to 6.37% in the United States. That's why application for the mortgage fell by 5.2% in the United States, which means that the Americans increasing the interest rates for 30 years bonds now, 30 years mortgage rates. Now they have a less interest in buying the mortgage. I mean, there are less interest for mortgage applications, which is falling by 5.2%. And generally, the mortgage activities are slightly lower. Today, we're going to have the very important data from housing market, as including the building numbers, export price, housing starts price, and export price, import price, and also housing starts, which will be very important numbers to watch. Industrial production and capacity utilization also should be watched as another important data. American Petroleum Institute earlier today published its weekly report showing that inventories increased by more than 4 million barrels. Later today, we're going to have official numbers from EIA, and while overall they are expecting for 1,900,000 barrels drop, I do expect more than 2 million barrels inventory increase in the United States. That can again put the pressure in the oil price. Checking the chart, we can see that the market risk is still high. While yesterday VIX increased to above 22.20, now the VIX moving towards around 21.50, a little bit higher and lower, but it's a very high number for the market risk. That's why the risky assets, that's why the safe haven asset, including the US dollar and the gold, they are positive. Gold, the US dollar index, positively trading around 99.50, just like a few hours earlier, just like more than about an hour earlier, it was around 99.70, while the dollar index increasing, the gold was at the same time increasing. The gold with the higher risk in the market increasing about $4,100 again, and the oil is falling low as the economy is getting more under pressure and inventories increased. Gold oil, after touching $60.80 last night, now trading lower, and we expect to see the price lower. For the gold, still everything is positive, and we expect to see the gold price again higher and higher. The thing is that for the gold safe havens and the market risk is still supporting the price. The next target will be around $4,150. While for the stock markets, with the higher risk in the market, the last days the prices fell. Now ahead of the Nvidia earnings and after several days falling down, we had some corrections, slight corrections today in the future markets. Now we are waiting for the US market opens, and most probably if we can see in a bigger picture, we can see the downtrend can continue further. With the falling prices in the stock markets, in the bigger picture, we can see the pressure on a Bitcoin as well. Bitcoin also falling towards 91,000, around 90,000 earlier today. Now trading at 91,300, but generally still in the bigger picture, the Bitcoin is still downtrend, even thought just like today is the moving sideways, but generally just looking at an hourly picture is the sideways, but generally the Bitcoin is a downtrend in a bigger picture, and we can expect the price to fall further. That's the market condition ahead of Nvidia earnings reports. Have a good day. Bye.